Happy Friday, ladies and gentlemen, and welcome back. It's your friendly neighborhood PM with your top 3 market points of the week. And it has been a doozy this week as the markets have sold off. So let's just dive right into your top 3 points and see what's been driving everything. At point number 3, it's been crypto, particularly Bitcoin, selling off steeply. Now, Bitcoin is down close to 50% since its all-time high in October, where it reached $120,000 per token. Right now, it's hovering between $60,000 and $70,000 per token. But a lot of this is being driven by increased geopolitical tensions and a more risk-off environment for investors, especially creating a domino effect where fund managers are also delevering their exposure to the cryptocurrency. At point number 2, software. So we've seen a steep sell-off in the software industry names, particularly Microsoft, Salesforce, Workday, all selling off steeply due to concerns that AI tools could materially disrupt their businesses. Now, this is largely being caused this past week because Anthropic, one of the key players in AI development, released a new plugin for their Claude model that can assist with legal work. Now, all this did was further pressure software name shares as the larger industry is down close to 24% year to date. And then finally, point number 1, it's Capex concerns. We talked about this predominantly on these calls in the past, and we've always said you got to keep an eye out for them. Well, after posting their quarterly earnings, Google and Amazon released Capex guidance numbers through the roof. Google announcing they're planning on spending $185 billion just this year on AI Capex, while Amazon is announcing close to $200 billion of AI Capex, well past any analyst expectations on both companies. Now, this is really becoming an arms race across these hyperscalers and these Mag 7 names to who can develop and gain market share in the AI secular trend fastest and first. But once again, they're getting punished because investors want to see returns on this money that they're spending, because rather than using that free cash flow to return dollars to investors, they're spending it on investment. So they really want to start seeing some returns there. That does it for your top 3 points. But what are we checking out for next week? Next week, we're going right back to macro data because we've got labor market data, predominantly non-farm payrolls and unemployment rates. So we will keep you posted on that next week. But once again, that does it for this week's video. If you have additional questions, please reach out to your financial advisor or dig into the written weekend review. If you do not have a financial advisor and want to get connected with one, please just follow our link. But as always, please go out, enjoy your weekend, enjoy the Super Bowl, and we will see you the same time next week. Thanks again.